Alrighty guys, welcome to another trade recap video. Today we actually did take a loss for the final day of the week for our trading week. I'm going to explain why I took the loss and why I thought it was a good trade to take in the first place. So yeah, without further ado, let's get right into it. We're on NASDAQ here. We took one trade today, and if we go to the 4-hour time frame, before market open, I have all these lines. Let me get rid of these so I don't confuse you guys. So this is the only dotted line you need to pay attention to. This is when market actually opened. Let me just double check. Yeah, it actually opened there. And my bias for today was bearish. I was going into this bearish because we got a big candle down. We got a little retracement, and then these three candles, boom, closed down, right? So I would have been bullish if we had a blue candle close above this wick right here, right? We had a little, if we had a blue candle close above this wick, I would have been bullish for the day. But since that didn't happen, I was bearish, right? So I'm bearish on the 4-hour, so that means I'm looking for shorts. And let's go down to the 1-hour because I also like to get a good bias on the 1-hour. If we go to the 1-hour, market opens at 7:30, so around here. We're actually bullish on the 1-hour because we have, before the market, we have these candles closing above the high, having a break of structure to the upside, and so we're bullish on the 1-hour, but we're bearish on the 4-hour. So I'm still looking for shorts, and in my mind, I'm like, okay, this is just probably a retracement, which it is because as soon as the market opens, we get this big long pause candle down to the downside. But so with that in mind, I'm like, okay, well, instead of taking trades off the 5-minute and the 1-minute, because that's usually what I would do if both of my biases were in line with each other. So what I mean by that is like if the 4-hour was biased or bearish, sorry, and the 1-hour is also bearish, I would be taking trades off the 1-minute, right? And I would be entering off the 1-minute. But since my bias is actually like it's not aligned with each other, like the 4-hour is bearish, but the 1-hour is bullish, I would be taking trades off the 15-minute or the 5-minute because higher time frames hold higher power and higher value. So that's just something I was taught. But anyways, let's just get right into it. We could go down to the 15-minute here. We have what is this? I don't know what that line was, but we have a market open right here. Pre-market though, it's already going down, right? Pre-market, and then market opens at 7:30 here. So I marked the hourly highs because what I wanted to happen, which already did happen, was for a liquidity sweep, right, on the buy side of the market. So we got that, and that's good because we want a liquidity sweep because we are looking for shorts, and we know after a break of structure to the downside and we locate all of our confluences, we could find a trade to take for our shorts. So we got the liquidity sweep on the high time frame, which is good. So now we could scale down to the 15-minute and try to look for our confluences. So I marked that off. We get a little fair value gap formed right here. What else do I mark? I mark the breaker block which on the 15-minute, which is going to be right here. And I think that's all I marked off for the 15-minute. I think I also marked these lows because I wanted to, if I take a short, my take profit would be off that low right there. But let's go to the 5-minute now. So boom, market's opening. We get a little push up and a push down, which causes this. Oops, go back. And we get another fair value gap right here on the 5-minute, which price respects, right? So it comes in here, wicks in here, and then boom, strong push down, right? Strong push down. That wasn't enough for me because I like to trade in the time zone between 7:50 and 810. That's known as the kill zone. That's when the price is like the best and you want to take a trade off that. So I could have entered literally just off that respected fair value gap, but it was kind of too early and I wanted to wait for price to develop a little bit longer. Besides, it wouldn't have even hit my take profit anyways today, unless, I mean, look at what price is doing now. It's boom. I think our bias was correct, but we just got in at a wrong time. I don't know, but anyways, let's go down to the 1 minute now, and this is where we actually took a trade on. We took a trade on the 1 minute, so price ends up pushing into this breaker block, respecting it, respecting every fair value gap right here, right? And that's really good for me. It comes down, and then I'm waiting. We get a retracement to the upside. I'm like, perfect. It's retracing again. Let's see if it respects these fair value gaps. It respects this bearish one right here. This box that you're seeing right here. This is the bearish fair value gap. Respects it. Comes down. So now that it respected it, I'm looking for some type of confluence to get in, but I don't see anything. Because I like to have like at least 3 confluences back to back to back before I could really execute on a trade, and we get that actually later, but let's just keep going down. So we're going down, and we actually end up sweeping some lows right here. We could zoom in on the 5 minute and see what lows we actually swept. I'm gonna get rid of these time frames right here. So this blue line actually is what I marked. We swept this line right here as we're going down, and then we come back up, and when we came back up, we left a nice bullish fair value gap right here. This box that I already marked, but I'll mark it again right here. Bullish fair value gap, and I want to see if price, when it comes back into it, if it's going to tap it and keep going up and try to target this fair value gap again and the breaker block, or if it comes down to revisit it, which it did, if it pushes past it, and it actually pushed past it. It actually did push past it. And as you could see right here, let me mark this fair value gap that I didn't mark for you guys. We have another bullish fair value gap right here. And once I saw that the price actually did come in here a little bit, tapped it and went down and closed. We had it closed right here. I waited again, came back in, closed again. That's when I entered my trade today. So we could actually boom. We literally set our stop loss like right above this bullish fair value gap, and we had our take profit right there, right at those lows, for a 1 to 2 trade, 1 to 2 risk reward, right? Perfect trade, perfect everything. It made sense. It aligned with my bias. I for sure thought this was gonna hit, because not only did I was so confident, because look, we all see this fair value gap right here, this bullish fair value gap. Price came into it, right? Respected it, and then look, broke it. And as soon as I saw this candle right here break it, I thought for sure we were gonna hit take profit, and we were gonna target this liquidity, or this low. Look, see this line that I marked right here? I thought we were gonna hit that, but I actually set my take profit there, but then I was like, I never set it there, but I did set it on these lows right here. But I thought for sure we were gonna target this liquidity, sell side liquidity, but we never did. But anyways, let's get back into the trade. But yeah, it comes down, and it almost takes me out of my trade. If it would have gone just a little bit more, it would have took me out of my trade for a nice 1 to 2 risk reward. But then it comes back in to this bullish fair value gap, pushes up. So I'm like, okay, we're gonna be in a retracement, right? But I'm not freaking out, because I'm pretty confident in my trade. We have a bearish fair value gap right here, that as soon as price pushes into it and breaks it, then I'm like, okay, we're probably gonna get stopped out, because once you have price shift, when it's already has momentum down and it shifts and it passes through one of your confluences, that's not a good sign. And as soon as it broke past this bearish fair value gap, I was just prepared for it to get stopped out, and eventually, boom, look at that, supports this bullish fair value gap and stops us out. But yeah, that was my trade today. We were 1 for 2 for the week. We took one trade, or for the days. We had a winning day and then 2 losing days. So we had a losing week, I guess you could say, with 3 trades, but I'm okay with that because, you know, I'm still getting better. Even though I'm losing, I'm understanding why I'm entering in, and they're all making sense to me. So yeah, let's just shoot for a winning week next week and not be emotional about this loss. Just see it as a lesson. But other than that, thank you guys so much for watching, and I hope you guys enjoyed and learned a little, and learned why I took this trade, and kind of saw my point of view and my understanding of it. But appreciate you guys so much, and I'll see you guys on the next one.